You buy right, you'll always make money in real estate. You buy wrong, you always lose money. All right, welcome back. We're talking today with Daniel Rosenbaum about the softening rents and the Phoenix metropolitan market.
Yeah, so the Phoenix market has seen some softening in recent months, but overall markets, compared to pre-pandemic rates, is still very high overall. Yes,
No,
they're
but
much higher than pre-pandemic.
they are softening. We are seeing concessions happen. We are seeing higher days on market. I think the problem is a lot of people actually compare to pandemic time, and they need to realize you can't. It's completely two different periods. Pandemic was inflation that happened very quickly. Rents went up, and right now they are softening, and we are seeing that. Like when before you could put properties on the market higher than market value, and people would rent them because they were afraid there weren't going to be anything. And right now, that's not what you need to do. When you're marketing a property, you really need to look at what's market, be at market or right below. Like, let's give Walmart an example. So when they came into the market, Walmart wanted to do something different. And they did a marketing ploy which was genius. They did everything 99 cents because even though it's only 1 cent difference than maybe somebody else or a couple cents, that 99 cents makes it look a lot cheaper in the eyes of the beholder. So we take that same approach. When we look at what market is, we try to go, let's say it's 2050 or 2049. And it's, even though it's $1 difference, it makes a difference. And
it comes across as slightly different. It's like, hey, it's more value to the consumer, to the renter. But yeah, if it's at 1995 versus 2000, it's just that appearance. And you're right, some of the biggest retailers in the world do that, including Walmart. They have it's a good strategy on marketing for sure. What adjustments are you making with our team to lower vacancy, whether they're a single family home or apartment, the type of properties that we manage? What are you doing? What adjustments are we making as a team to improve performance of them?
The first thing we do is when we get a notice from a resident and we know they're moving out, we put it on the market and we try to pre-lease it. The second thing we do is if a property is sitting and we're not getting, like when we still have a resident and then in there and we're marketing it, one thing we do is we watch the first 2 weeks when we put it on the market, how many people are contacting us about that property? Are we getting leads? And if we're not, we need to adjust the price right away. Even though we say we're at market, if we're not getting leads and no one's contacting us when it's still occupied, we need to change something. And then if we did a remodel, we'll go back and do videos and pictures. Number one concern for owners is if they sit vacant too long, because what does that do? They're losing money. They have to pay a mortgage if they have a mortgage, but then they're losing money if they're not bringing in rent. So it's very important that we do certain things to make sure we minimize the vacancy loss. And let's discuss this. Like if you have a lease and you have a resident in the home, and let's say market is even $50 difference. What's 50 times 12? Let's look at this. It's about 600.
$600, yeah.
600.
$25 a month is $300, yeah.
Let's say I want the 50. I'm going to go after that $50. Okay, so I lose the resident. Let's say I lose the resident or $50 because they're like, I can find this other home for only a $25 increase or a zero or even a reduction. Not only are you losing that 600, now you have a turnover and you have vacancy. And it's very expensive to do maintenance right now across the board. So not only did you lose the 600, now you have a mortgage payment that's an expense. Now you have a turnover, and you might have to rent it out for the exact same price that you just lost.
It's not worth it.
It's not. So when an owner comes to me and says, I want to raise rents, I try to go, okay, let's really look at the picture here. Yes, we do want to raise rents, and we really do try. But right now, the market's not such where you're just raising rents as much as possible. You go run comps, you go look at it. And at the end of the day, if it's a $25 or $50 increase, it's not worth losing a resident over to try to get that $600.
Some of the reports that I have read recently, the average vacancy, right, in the last 2 or 3 years, it was close to 5%. Now the general vacancy rate, from what I'm seeing, is getting closer to 7.5%, 8% across the board in our market in Phoenix.
Yeah. And in some cities, they're actually 10%. So it just depends. But yeah.
But yeah, some of them they're creeping up, generally speaking. They're definitely coming up. 2021,
rents were just going insane.
Yeah.
And people didn't want to move out. But when they did, it was so easy to rent. Like you were at a 2% vacancy maybe, but we didn't have vacancies a lot of times because if it went on the market, we just rented it out again before it ever went vacant. So it's important to realize that you can't compare things to the pandemic time. Evictions have gone up, and so you'll see these reports, we're at the same level of evictions as 2008. Yes, but you need to realize how many people we have in Phoenix right now compared to how many people we had in Phoenix in 2008. It's a huge difference.
Overall, I think it's still a very strong market in Phoenix, even though we are seeing some trends where vacancy is increasing and some of the rent rates are coming down because some, landlords are hungry to get them leased out.
People talk about, it's impossible to buy properties right now. It's not. You can still find great deals. Even with softening of rents, even with everything that's going on, it's still a great market. And I would say it's still a great time to invest now, same as it was before.
As long as the fundamentals are right, absolutely. And the fundamentals in the economy are very strong overall.
They are, and you're really good about sticking to that. I think taking the emotion out of it. I think that's when people get into problems. They want to get into real estate so bad, and they get emotionally tied to getting into real estate. So they find a property and they're like, I'm going to get it. I'm going to get it. And then there's a counteroffer, and they're like, go up a little bit. And then there's another counteroffer. And the problem is you got to take the emotion out of it. It's flat-lined. It's meaning you have the numbers. Do they work? Do they not? You buy right, you'll always make money in real estate. You buy wrong, you always lose money.
I take pride in being disciplined to the point where I have been conservative. And I take pride in how conservative I've been. And I say that with a little bit of caution because I've seen other people in the last, especially from 2020, 21 through 2022, where they were buying properties in multifamily, for example, on commercial buildings for less than a 3 cap rate. You're talking 2.5 cap rate. And then they were just expecting rents to continue to climb so crazy. And when I looked at the numbers, I'm like, they don't work. Like the numbers don't work for me, how I want to run my numbers. They just don't work. There's no way you can be cash flow positive or even cash flow break even on a cash flow basis. From what I've heard with a lot of the brokers, a lot of people are, they're over leveraged. So they don't have a lot of equity in these properties. And now the value of these properties are coming down and cap rates are going up. And, some of them may be in trouble if they over leveraged.
Like they'll have to go back to their investors and say, hey, we need more money because the rents have softened.
No matter how hungry you are to grow your portfolio, if the numbers don't work, they don't know or they don't work.
They don't. But there's always deals out there. There are always deals out there. You have to be willing to walk away from the ones that don't work and wait for the ones that do.